Indian Prime Minister Narendra Modi now faces greater difficulty in presenting the country as an appealing investment hub for President Donald Trump and U.S. investors. The landscape of Indian financial assets has changed significantly since Modi's last U.S. visit nearly 2 years ago. At that time, he highlighted the nation's thriving economy, surging stock markets, and potential to compete with China as a global manufacturing powerhouse. Today, making that argument is far more challenging. Modi's visit coincides with foreign investors withdrawing $21 billion from Indian equities since late September, the rupee reaching new lows, and the country's $4.1 trillion stock market emerging as Asia's worst performer this year among major economies. Adding to the pressure, Trump's threats of reciprocal tariffs are further complicating the situation. Modi's visit to Washington comes at a crucial moment for India's markets, according to Vikas Prasad, a portfolio manager at M&G Investments Singapore PT. While India remains more shielded from global trade tensions than some of its peers, greater clarity on tariff policies would help reassure investors, he noted. Reviving investor confidence in India has never been more urgent. China's rapid technological advancements, exemplified by DeepSeek's rise, are driving a shift toward North Asian markets, particularly among U.S. funds. Meanwhile, India faces its slowest economic growth since the pandemic, and its equities remain the most expensive among emerging Asian markets despite recent declines. The rupee, once among the best-performing currencies in emerging Asia, has now become one of the weakest this year. That said, Modi still has strong points to highlight. India remains the fastest-growing major economy, with a rising population of affluent consumers. A record personal income tax cut this month is expected to stimulate spending, while the government has committed over 11 trillion rupees, $128 billion in fiscal 2026 for infrastructure upgrades. A weaker outlook for India isn't the solid support factor many had initially hoped for, noted Ian Hui, a global market strategist at J.P. Morgan Asset Management. However, he believes near-term prospects are improving and maintains that India remains an attractive long-term investment despite recent setbacks. Reviving that potential hinges on the recovery corporate earnings. Profits for NSE Nifty 50 firms have seen downgrades for 2 straight quarters, with more expected as Trump's trade policies raise business costs. As Modi prepares to engage with Trump, expectations are higher this time. Securing exemptions from tariffs is key to restoring confidence among investors concerned about further disruptions. Modi's trip to the U.S. will not have a material impact unless it brings reasonable certainty that the Trump administration will not target India for its lopsided import tariffs.